Good morning, welcome to ICC Austria. It's day 2 of Trade Finance Week and we're really going into the detail on guarantees with regards to trade finance. And here with us today to talk about demand guarantees in Africa, I'm delighted to be joined by Isaac Mahanke from Standard Bank. Isaac, welcome to Trade Finance Talks TV.
Hello Deepesh, and thank you for hosting me today.
Thank you. And gosh, it's been a couple of years. It was during the pandemic when we did the same thing over Zoom, I think. So, quick introduction to our listeners and viewers. Who are you? Where are you from? And what do you do?
Yes, no, it's been a while. So my name is Isaac Mahanke, and I am from Johannesburg, South Africa, and I am the group head for traditional trade products at the Standard Bank Group. We are in 20 presence market in the Sub-Sahara in Africa, and look forward to having a conversation with you. I want some more.
Thank you so much to have you here in person. So let's start with just bit of a helicopter overview. Yes. What forms of guarantees are used across Africa?
Across Africa, because we're in such a huge spend in terms of infrastructure drive, so we see a lot of demand guarantees, especially performance and advance payment guarantees to support those particular construction contracts between the employer as well as the contractors and the subcontractors. So demand guarantees, especially performance and advance payments, are quite vast, especially across Africa. That's the majority of the guarantees that we see, with few financials guarantees there, but performance and advance payment seems to be the flavor of the continent.
Well, it's very interesting because am I right in saying that that's quite different from other use cases or other similar trade finance products that are used around the world?
Correct. Around the world, we see a lot of standby letters of credit, surety ship, as I've learned this week at Austria, that Germany and Austria use a lot of surety ship. Then you also have letters of credit and insurance products across the world that are used, especially to support such commercial contracts. But in Africa, demand guarantees seems to be the flavor, especially because they give more comfort to beneficiaries.
Yeah, I mean, can you talk about that in more detail? Why are they so popular and what are the benefits of demand guarantees?
Yeah, you see, the sweet spot about demand guarantees is that they're simple demand guarantees. They're independent from the underlying contract. So they provide that additional layer of protection as well as comfort between two parties that actually don't know one another. And there is a huge importance of the project that's being undertaken. So you find that additional layer of comfort, which is not really complicated, whereby if the underlying contract does not perform, and then they can access the second layer of protection, and they can simply just state a demand and they go to a reputable bank and then they get payment under that guarantee. So it's quite a very popular product as comparison to other products which tend to tangle or interfere with the underlying performance, while else these are two separate contracts. So beneficiaries and applicants usually would prefer them compared to other products that are seen around the world, which are more complex compared to demand guarantees.
Thank you, Isaac. And I guess with guarantees come the rules, and there are lots of really important rules that govern these traditional trade finance products. Can you talk us through some of the rules that underlie demand guarantees?
Oh, yes, of course. So some of the rules that we are used to, which are very good rules, are URDG 758. That's the latest publication. And recently they've released the international standard of best practice around demand guarantees, which we have implemented in our bank to try and support the URDG rules. So these are simple rules that are there to protect both the applicant, the beneficiary. They articulate what are the rights and obligations of each party, how one can get protection, and how one is expected to perform from that particular undertaking that the bank will issue out. So these are very, very important rules. They're very simplified and they're understood around the world, meaning if there are contracts that are working and winning work in Africa and working with some of the African counterparts, they speak the same rules, they understand how the rules work, and therefore that actually makes it easier. They're the lifeline of commerce, as we say, because they support a lot of projects in Africa so that we can see growth and development.
And it's interesting because they support both sides of both parties on either side of the transaction.
Right.
Are there any complexities and complications around using demand guarantees?
Correct. So complexities really arise when there's a lot of misunderstanding or probably a shortage of knowledge. So we find that, and on top of having these rules, you find that other parties that do not understand how guarantees work try and incorporate some of terminology or clauses in there that conflicts the actual rules or the operations of guarantees, and in that brings a lot of complexities. And also given the world that we're living in now, there are sanction clauses, there are other parties that probably do not accept certain guarantees from certain banks. So you've got additional banks in the value chain, and therefore you've got multiple guarantees. So that brings a lot of complexity in terms of managing guarantees. There are other applicable local laws that other parties might not understand. So the insertion of all of these rules where parties are trying to protect themselves while else they're actually just complicating the guarantee, it ends up frustrating the product itself, and everyone else ends up being a bit nervous and not really getting what they need or the protection they need out of the guarantee.
Yeah, so actually a fundamental lack of understanding around the rules, around the products, and also, you know, not helped by lack of education for those bankers. So I guess, you know, here we are at IC Austria, the home for this trade finance education globally for demand guarantees. Can you talk us through perhaps a case study? So say you mentioned the construction sector, and that's quite a popular use case for demand guarantees in Africa.
Yes.
Give us a case study.
So one of the case studies, or some of the cases that come through my desk, especially around advanced payment guarantees, what we see is that there's a lot of confusion and understanding in terms of how the product works, because one of the conditions is that for a beneficiary to claim under the guarantee, they must prove that payment has actually flown to the applicant. So where we see a lot of complexities is that beneficiaries will either want to either amend that clause in terms of when the money should flow or where the money should flow, but however then they miss the important part that demand guarantees are similar to LCs. For a guarantor or a bank to pay out, we need a documentary evidence to evidence that the money has flown to the applicant. If I do not bank the applicant or do not cite the money within my own records, I need a form of a documentary evidence, and that is the part where we find a lot of beneficiaries do not understand, and therefore we see a lot of frustration when we tend to turn down such claims. And an additional one would be, especially where you find that applicants are also confused. If they've not received the advance payment, they actually challenge the bank in terms of them being charged fees because they believe that the guarantee is not active. But if they actually look at the rules very clearly, the guarantee is effective from when we issued out. So if the beneficiary is in hold of my paper, that guarantee is valid. The mere fact that the money has not flown to them, it's a condition that will only apply at a claim stage. So those are some of the complications that we see come across, and then that actually frustrate the entire process. And I think that is very key, that we try and ensure that we bring everyone on board and make them understand that the rules are there for a reason, so that they balance the rights and obligation of each and every party. They're not skewed into one party's direction. They're actually a fair balanced. And I think here at ICC Austria, I had the pleasure to actually sit on some of the panels with some of the people that are actually involved in drafting these rules, ensuring that they scan the whole world and understand what are the best practices and bring those forward and try and codify them so that the world can actually ensure that they are comfortable in the trading around demand guarantees that are subject to URDG 758.
Thank you, and I think it's really important to voice and air your opinions, you know, representing the African continent on the use of demand guarantees and how they're locally applied, and really bring that to the international table. And I think it's really important for users of these products and compliers of the rules to actually take this forward up onto the global stage. I guess to end, I want to ask if you have any tips for the utilization of demand guarantees, and where can practitioners, borrowers, lenders, etc. go to find out more about demand guarantees and also the URDG rules by the ICC?
Yeah, so I would say in terms of tips, in terms of how to use the demand guarantees, I would say any contract that you are in, not necessarily construction contracts, but any contract that you are in and you are dealing with a third party where both of you are really trying to trade, but however do not understand or maybe do not know one another, guarantees will come in and add that benefit of protection, because bankers come in and we play an intermediary role. So you can have that trusted partner to help you through that. Information around guarantees, my tip would be both the applicant as well as the beneficiaries, which are corporates, state-owned entities, small and big, large conglomerates. I would say that they would, bankers have a responsibility to teach them how product works, but also you can find information freely on the ICC website, or you can visit your local ICC chapter, Banking Commission chapter, that can actually help you. They offer a lot of free seminars in terms of teaching businesses how to use these international products. Also at ICC Austria, we find that we meet a lot of different banks, experts in terms of exchanging knowledge and ideas and advice in terms of how actually demand guarantees work. And also with Trade Finance Global, we know there's a lot of material that's available either on the website as well as some of the interviews that actually provide tips in terms of how to use these products. So I would advise all companies, small or big, to actually reach out to any of these platforms and actually learn and get more knowledge around demand guarantees compared to other products, because I would say demand guarantees, I would rate them the #1 product set compared to the other ones in terms of ensuring that your transaction is really protected and you can get on to the business of the day and doing what you do best and know that you're protected at the end of the day.
Thank you, Isaac. So clear and concise. So engage, learn, and come to Trade Finance Week are probably your 3 tips. Thank you so much for joining us.
Thank you so much for having me.